Well, greetings and salutations, test takers. This is Series 7 Guru coming to you with our every other Wednesday office hour for paid students. So we do this every Wednesday. If you're a paid student, that's first come, first serve. So we just go into the queue and then we answer what a question, spend about an hour doing so. If you're a paid student, you're welcome to join us. We post this as a replay. Okay, everybody, the program here. Just put what you'd like to talk about. Any questions in the chat? It's first come, first serve. Please, be courteous. Don't put like 50 questions in there when there's other people who probably have questions too. So put that in the chat and we'll start knocking them out. We're here about an hour. If we don't have enough to keep us busy for an hour, I'm all cool with that. We'll call it an early evening. If you're joining us and you have something private to say to me or want to talk to me, then wait till we're done. And then afterwards, I'm more than happy to talk to you unless you don't mind putting your business out there. Anybody have anything they want to talk about? If not, we'll see you next Wednesday after next. I don't see anything in the chat. Is that just me or any questions? Hello, anybody there? Time value. Okay. We can certainly talk about time value. Let's not do that first. Let me get a whiteboard. Boom.
Oh, am I muted? No.
You were not muted, and then you just muted yourself.
You are not muted, but I'm about to mute you.
Great. Okay.
Welcome to the brave new world of Zoom. All right. Well, time value isn't as important as intrinsic value on the test because time value kind of erodes. If you're going to trade options for me, I'd say, listen, I want you to write 1,000 times. Options are a wasting asset. Time value erodes. At expiration, a contract is only worth its intrinsic value. Now, the two components of a premium that you're either going to pay or receive consist of the intrinsic value and time value. As I told you, time value is not as important as intrinsic value because on the test, they love the phraseology, you close out at intrinsic value, right? So if you don't know intrinsic value, you're going to kind of be stuck. Let's say that we're looking at an Apple 2:30 call contract at 9. And last time I checked, Apple was 2:33. Call up. Call up. As I mentioned, to answer the question about time value, you kind of first have to approach it through what's called intrinsic value or what we call in the money. So we're looking at an Apple 2:30 call. It doesn't matter whether we take the long perspective or short perspective. Call up. If the market price is up from the strike price, the contract has intrinsic value. Another way to do this is intrinsic value is the contract likely to be exercised? Does it make economic sense? Is it likely somebody would like to buy Apple at 2:30 when Apple is at 2:33? The answer to that question is yes. So now that we have that, we can plug that in and say an Apple 2:30 call with Apple at 2:33 has 3 points of intrinsic value. And we said the time value plus the intrinsic value equals the premium. Now, I think of time value as everything in excess of the intrinsic value. As I said again, I don't think that this is going to be as big a deal on the test as it would be in terms of the real world. I mean, we're in Series 7 fantasy land. At least when you pass your Series 7, you get to leave Series 7 fantasy land. I'm stuck here permanently. So when I'm demented, I never get to leave. Now, as a buyer, you have to be right about 3 things. You have to be right about direction, up. You got to be right about how far up, and you got to be right about the timing. There's that time value, right? You're going to have to turn that time value into intrinsic value. Another important concept here is that at expiration, a contract is only worth its intrinsic value. At expiration, a contract is only worth its intrinsic value. I think a great memory aid for this is T. Now be careful. I'm not asking what can happen to a player. That's a different question. You know, as a player, you can make money, lose money, break even. That's not what I'm asking. I'm asking what can happen to an Apple 230 call contract. That's a different question. An Apple 230 call contract can be traded. It can be exercised, or it can expire. Now, whether that's good news or bad news is a different question. That depends whether you bought it or you sold it, right? So time value. Any other question about time value? Again, if you tell me you missed your mark on Series 7 because of time value, I'm going to say, you got other problems because, again, time value doesn't come up as much as intrinsic value. Let me give you an example of this. Your customer goes long an Apple 230 call at 9 when Apple's at 233. Who cares? We don't care where Apple's at when we do the trade. We care where Apple's at when we close the trade. It says several weeks later. They love these time clock questions. With Apple at 240, you close out at intrinsic value. And that's why that's important, because if you don't know the intrinsic value at 230 call at 240 is 10, you won't be able to close it out. Now that's assuming you didn't memorize break evens. That works. You memorize break even 233, 240, 7 points right direction. That works as well. But they can gunk it up a little bit with what I call that Jedi mind trick, where they give you a word salad and then you got to work your way through it. All right. So I think the big takeaway for time value is options are a wasting asset. Time value erodes. At expiration, an option is only contract is only worth its intrinsic value. If it has intrinsic value, the contract will be exercised. If the contract has no intrinsic value, the contract will expire worthless. And again, be careful whether that's good news or bad news is a different question. All right. Looks like in the chat, whoever asked this question, you have anything else you want to talk about in terms of time value? I take care of that for you. All right, Tyler looks like he's got the next one, technical analysis versus fundamental analysis. I'm not sure what exam you're taking, Tyler, but that's pretty much a distinction that is testable on all exams. You know, fundamental analysis, we're going to be looking at a balance sheet and an income statement. To say you're a fundamentalist does not mean you're a member of the religious right. So in fundamental analysis, we're looking at the industry, the stock, the economy. If you're taking a 65, 66, you should know fundamental analysis can either be done bottom up or top down. Bottom up would be I start with the stock, do balance sheet calculations, look for valuation techniques to see whether I think the stock's undervalued or overvalued. And then I look at the industry, then I look at the economy. That would be bottom up. Top down would be I look at the economy, then the industry, and then the stock. Technical analysis, I'm looking at past price action to predict a future trend, right? So what they love to do is give you questions like all the following are associated with technical analysis except. All the following are associated with fundamental analysis except. The biggest thing about technical analysis is charting, chart patterns. We should certainly know support and resistance. We should certainly know that a head and shoulders pattern is a signal of a reversal. We should certainly know that as a technical analyst, I don't want to buy stock or sell stock when it's in a trading range because that's dead money. I only want to get on board the train when it leaves the station going my way. And what that means, I want it to break out from its chart, either break through its support line so I can short it or break through its resistance line so I can go long. And the type of orders a technical analyst might use to do that is a buy stop above the resistance line and a sell stop below the support line. And by the way, those buy stops and sell stops could accelerate whatever trend we're looking at, right? If we're looking at a chart, I'm getting lazy here. It's late. Boom, let me get your chart here. So we were just talking about Apple, and here's the chart on Apple. And we say, here's our bottom, our resistance line at 230. And here's our resistance line at 240. And as I just said, as a technical analyst, I don't want to do anything when the stock is, stuck in this trading range. I mean, that's dead money, as I mentioned, right? What I want to do is buy the stock when it breaks through the resistance line or breaks through the support line. And so, again, very testable to know where we're going to place this order. So I'm going to place a sell stop here to go short. Right? You should know sell stop's got to be placed below the market, right? I'm going to put a buy stop over here. This is a free office hour, JB. It's not a 4-day class. I'm looking at your chat. I'll get to it in a minute, but man, now the reason I went to my whiteboard here is because we should also know that these buy stops and sell stops can accelerate a trend, because as technical analysts, it's all about trends. So if I ask you on the test, what orders could accelerate a bullish trend, you'd say buy stops, because they're above the market, and as they get triggered, it adds more fuel to the fire, right? And then the sell stop would accelerate a bearish trend. And I told you the other charting pattern that's very testable, is a head and shoulders pattern. Head and shoulders is not a shampoo you use to take a bath in the stock market. A head and shoulders pattern is a signal of a reversal. And this would be the end of the bull and beginning of the bear. And an inverted head and shoulders would be the end of the bear and the beginning of the bull, right? So recognizing those basic charting patterns. All right, Julie, I was hoping to cover SMA, option hedges, and protection qualified. Well, Julia, that again, there's no way in an office hour we're going to be able to do a 4-day class. I will cover SMA, even though I don't think it's a good idea. Here's why. If you miss your mark on the 7, it's not going to be because of margin. Margin is 3 or 4 questions. It's very straightforward. And, I think all the test prep vendors go way over Godot, including Past Perfect. You can watch Julia on my channel, tutoring replays. And one of the tutoring replays is I call hellacious margin questions. And I feel bad that this young lady paid me $250 an hour to do Past Perfect margin questions she's never going to encounter on the exam. But her broker dealer wouldn't let her move on to, Past Perfect Unit 20 until she got like a 90% on Unit 19, which I thought was kind of ridiculous, because it's a waste of her time and resources to even do that. But SMA is a holding tank for your excess equity. So if you buy 1,000 shares at 40 and you make the required deposit, very much test phraseology. So 1,000 shares at 40 would be long market value. I think the best analogy is a house. Market value of the house minus mortgage on the house equals equity in the house. Right? So here's the mortgage. This is what we're going to lend you as a broker dealer. And then you got to put up half. That's called Reg T. Now, as a margin clerk, I don't really tell you this because I don't want to use broker dealer money to settle your trade. But, regular way settlement, T plus 1 is between broker dealers. And under Reg T, customers get 2 additional days to come up with this $20,000. So $20,000 here is what you need to deposit. You have to initially be at risk for 50%. And so on day 1 here, you're perfectly balanced. And so if you plan on getting these margin questions correct, you need to be able to do the initial setup based on the classical margin equation, which is long market value equals equity. And I told you they like time clock questions. In the earlier thing, when I was going over time value, I said several weeks later, at expiration. They like that. And they say the stock goes to 50. And so now what I'm doing is what's called a mark to market. So if you're going to get option questions right, you got to know the classical margin equation, and then you got to do a mark to market. Now, again, here, the neat thing, Julia, is just like your house. If your value of your house goes up, your mortgage remains constant. And so you have equity buildup in the house. Same thing in a margin account. You have equity buildup. Equity always represents what you would have if you liquidated the securities and paid off the loan. Nobody's suggesting you do that. I say, hey, for customers like you, Julie, that pick stocks that go the right way, we're willing to advance you a further loan. I always want to compare what you have to Reg T to see if perhaps I can't loan you more money, because loaning customers money is one of our all-time favorite things to do. And so I say, listen, you only need to be at risk for 25,000. Where am I getting the 25,000? That's half of the 50. And you're at risk for 30. I'm allowed to extend you a loan on $50,000 worth of collateral. I'm allowed to extend you a loan of 25 and you've only borrowed 20. So right now, Julia, you could have $5,000 in cash, or you could buy $10,000 worth of securities. You say, Dean, do I have to do something today? If I told you had to do something today, you might use this excess equity in a way that's not in your best interest. You said, well, Dean, I like it at 40, but 50 is a little rich for me. I said, well, I'll tell you what I'm going to do. I'm going to create a holding tank, Julia, for your excess equity. I'm going to make a special memorandum to your account that on today you had $5,000 in excess equity. So that way, if the stock goes back to 40, you don't lose access to this, cash or buying additional securities. 2 times your SMA is your buying power. And as I said, I wouldn't worry about this as a test issue because we don't usually test you on margin accounts that are going the right way. We test you on margin accounts that are going the wrong way. We test you on, not happy customers, but unhappy customers. Okay, so that I think, by the way, I don't know how much time you want to spend on margin. I had a Merrill broker, and he's a Merrill broker now, but he was doing his tests, and he was working hard. And if you're working hard, I feel, I'm going to answer your questions for you, but he kept sending me the most obtuse margin questions. And I said, really, this is just a waste of your time. There's more target-rich environments. I mean, you're working hard, so I'm not going to give you grief about it, but I wish you were sending me questions about munis or options or mutual funds. And it was very impressive because this doesn't always happen. He goes, well, if that's what you say, Dean, I'm going to leave margin alone. I go, well, thank you so much. Sometimes people don't listen to me. So option hedges and protection. Well, again, let me go, Julie, I'll come back to you. But remember, the kind of concept in the office hour is we answer a question, then we move on to the next question, and then I'll circle back. Right? Because otherwise, Julia, that would be an hour, and that's not fair to other people on the call. So I'll circle back. I got your SMA done for you. By the way, ladies and gents, do you know I have a YouTube channel? And it has a channel search bar. And you can put SMA in the channel search bar, and all kinds of stuff will come up. Yours truly going over all kinds of questions that people have submitted to me, tutoring replays, margin class replays, lots of content. All right, let's see what's our next one. So Jennifer, wow. Dean, I've taken the 65 2 times. Well, Jennifer, some of my 7 people aren't going to probably like to hear this, but I think 65 is the toughest exam. And the reason I think it's the toughest exam, Jennifer, is the 7 has got a lot of stuff, but there's an area of flow to the 7. There, makes sense about what they're trying to test you on. The 65 is all over the place. I mean, 2 questions here, 3 over there, 4 over there. I'm even struggle sometimes with Jennifer, where I put something in my playlist for the 65 and I take it back out and I put it back in because I don't know. Do they really need to, spend that much time on it? Low 70s, 80s on simulated quizzes. Now, I don't know if you missed twice using Kaplan, but this might be a reason to get another test prep vendor just to see a different voice or hear a different voice. I've been doing the time blocks. I love it. That's what I always suggest. Then using the performance tracker. Love it. Love it. In your experience, what do you think I can do to overcome my disconnect in passing the test? Well, some of us just have to do it the hard way, Jennifer. We had I don't know if you were on a Tuesday live stream last night, Jennifer, but boy, we had so many testing victories. And Jennifer, I think probably 3 or 4 or maybe even 5 of them were people who had missed their mark the first, some of them more than once. And I think they had, showed such resiliency. I think one of them was 4, and that's really resilient because, third time you got to wait 6 months. So, I mean, woo! Why don't you do me a favor, Jennifer? Why don't you join me? It's probably better to ask a successful test taker this. Lady Brill was on our last live stream last night, and I invited her to be a guest and talk about her challenges, and she'll be joining us Tuesday, and maybe that'd be a good question for her rather than me. But I don't think you're going to miss it the third time. I don't know what your 2 scores were, but you just got to stick to it. I know that's hard. I wish I had some kind of magic pill that you could pop and pass the 65. If so, I'd be rich, right? Here, you want the blue one or the green one? So, um, 3, God, that hurts. God, that hurts. 6 the second time. Well, be careful with those draws. I don't know too if you changed answers. Don't do that. You got to be confident in your answers. But the draws are different, right? So that can happen. You're not the first person. I know it probably doesn't make you feel better, but you're not the first person who's done worse the second time. I think what causes that, Jennifer, and let's just address that real quick, is that I tell people to do an intellectual inventory when they miss the mark and find those areas where they want to, remediate and get them above par. And I think sometimes people then spend so much time doing that the other stuff kind of slips. The stuff they were, pretty good at lays fallow, and then they go down there. And I think that's sometimes how you end up with I think a couple ways you can end up with a missing more questions, the draw, and then, you're over learning a particular part of the 65 without bringing that caboose always up. That stuff you already know, you got to keep refreshing and keeping that evergreen, so to speak. Can you clarify short-term gains with options? Well, very easy, Jerome. All options trading is short-term. I told you 3 things can happen to an option contract. It can be traded, it can be exercised, or can expire. So trading and expire, all of it short-term with only one exception, which I don't even think you're going to see on the test. The only exception to that will be when you buy a leap. If you sell a leap and you're at risk for more than 12 months, it's still not long-term. The only option trading that could be a long-term gain would be a leap call contract or put contract. You were risk for more than 12 months. That's it, period, full stop. Now, in terms of exercise, for the most part, cost basis follows break even. So if you just, every time you got cost basis did break even about 99 of 100 times, you'd be right. Now, Jerome, I'll probably, we do these as replays, these office hours. And I'll tell you what I'll do. I'll put into the video description of this replay, Jerome, 2 videos I have on taxation. I have an entire tutoring session on option taxation that they gave me permission to put on the channel. And then I have about 20 practice questions, option practice questions on taxes. I really think this is more of an issue with test prep vendors and test takers than it is an actual Series 7 challenge. I don't think you're going to get, if your 20 option questions are not going to be taxation. They're going to be recognizing break even, max gain, max loss, suitability, but it's there. If an investor has owned the stock for 2 years and buys a put, it doesn't interrupt the holding period, Jerome. As long as I've been at that stock for more than 2 years, it doesn't interrupt the holding period. If your example had given me that the guy hadn't held a stock for a year and then he bought a put, that would interrupt his holding period, reset, because you're no longer at risk, right? So if you buy the put before you've established the long-term position, then you're going to be in trouble. Okay, let's see. Will that have no effect? It does have no effect. And the reason, Jerome, it has no effect is because you stipulate in your example the guy's had the stock for 2 years. Right, so that's the key there. But isn't all options short term? I selected the end of the holding period. No, it doesn't end the holding period, right? Because of the 2 years. That's why it doesn't interrupt. I remember you talking about her, in our Kaplan class. Well, there you go. I usually have permission. Lady Bro gave me permission for, obviously she wouldn't be on the channel if she didn't want to be there. Theodore, let me see if I can see what that is. Yeah, okay. Can you guys see my screen? Yes, no, maybe. What happened? Is that showing up on let me just get rid of my, let me see if I can bring that up on the screen. Is that showing up on the screen? No? Okay, well, that's cool. I can do it on whiteboard. So let's get a whiteboard. Boom, boom, boom. Okay, let me get chat going. And investor buys 300 shares at 15. Living in my home. So let's get that so I can see it. Okay, so what I'm checking here, ladies and gents, is just to make sure that everything's 3. Because if that's the case, I'm going to do things on a per share basis. Right. And then I'm all done, multiply whatever it is. So when we buy 300 shares at 15, is that money out or money in? I like to use dollars out. Some people like to use debit. Some people like to use minus sign. I like to use money out versus money in. And you know what I always tell people, you get good at contract specifications and you get good at your contract specifications. You're not fumbling around, for example, here that when you write 3 calls, you have an obligation to deliver the stock at 20. So if we write the calls at 1, is that money out or money in? Now, the other thing I do mechanically is I like to put things on different lines because if I have to close this thing out, I don't know where this question is heading, but I want to be able to, if they say we sell the stock or it gets exercised or whatever. So in other words, what I'm not going to do is put my 15 and my 1 on the same line because I need to deal with each of these things in the question, right? So then it says, and I write 3 puts. I was looking, Jerome, that we're going to buy the puts. So they almost got me because I thought this was going to be a caller, right? That's what you get for when, RTFQ, RTFA, right? And so I thought we were going to sell the calls to pay for the puts. And then I see that's not what we did. We actually obliged ourselves to buy another 300 shares. Woo. So now we got to decide, okay, what's going to be bad news? Bad news, we got to determine what's going to go on here. Now, what I like to do is I now like to look at the question, Theo, and say, am I bullish or bearish on the stock? Am I bullish or bearish? And I like to think, okay, well, I'm a bull because I own the stock, right? And so they're asking max loss. So what's max loss going to be? Well, as a bull, my max loss would be when the stock goes to 0, right? So if this stock goes to 0, I'm going to lose 15 points there. The call is going to expire. So I get to keep that money. Uh-oh, I got a problem on those puts. Because if the stock goes to 0, somebody's sticking me 300 shares at 10, right? So that's going to be $10 I'm going to have to pay for the stock. Boom. And the stock is now 0. Now, by the way, I'm the one who had to interpolate that that's going to be the bad news, right? So let's see. I got to have 25 out. Now I'm just going to net this. Boom. And I've got, that really sucks. I got like $1.50 in. So, by the way, it puts, I said I would buy the stock, so I can do with that. And so that's going to be my loss times 300 times 4 times 300 on the put and 100 on that stock. So whatever that number is. So crazy. Do I think, Theo, you're going to see anything like that on your exam? I do not. I don't know if that's a past perfect question or a Kaplan question, but you're never going to see anything like that. You might very, very low probability see a caller, very low probability. Okay. Yeah, well, I just showed you that the tackle. By the way, whenever you get something hellacious like that, you make a T. You make a T because you can't, Theo, you can't memorize break evens on that one because there's no way to do that. So when you got a lot of stuff going on, you got to make the T, you got to do setup, you got to track the money in and out, and then you got to determine on that one where you when it says bad news, then you got to say, okay, am I a bull or a bear? And the way you do that is you look at the larger numbers. I got 100 shares there at 15. I want that to be unlimited gain. So that was a tough one. What's tripping me up? What do you think? Well, I just did that there. You're welcome to unmute and tell me, what was tripping you up. But I think what's tripping you up is, that was a difficult question. There's a lot going on. I actually think that should be a churning question, right? A churning question because you got, what, 1, 2, 3, 4, 5 trades in that thing. I'm not a big fan, Jennifer, of RC tutors. And here's why I'm not a big fan of RC tutors. They have a front load on that. And so my understanding of varsity tutors is they make you sign like a contract in advance that you're going to buy X number of hours from them, and you don't control the tutor. So, for example, you book tutoring with me, and I don't like you, and you don't like me, you're out an hour. I'm out an hour of my life, you're out an hour of your life. We move on. So I'm not a big fan of varsity tutors. Brian Lee does tutoring. He's very reasonable. He's a little bit of a judge in terms of who he wants to work with, but he's only got $100 an hour. So that's a great deal. I'm like 250 and I'm completely booked. So, but I'm not a big fan of varsity. I would look for other alternatives. I gave you Brian Lee. Mark Esposito is a Kaplan instructor. He's a great Kaplan instructor. He too is very reasonable. I think he's like 100 something. So, um, yeah, I'm with you, Theo. That was a tough one. All right. Anything else for tonight for our office hour? Okay. Well, we do the office hour every other Wednesday, and I'm coming to you from my off-grid location in Seligman, Arizona, Route 66. And the Arizona's funky, doesn't change the time. And as much as I love you guys, I'm not going to be doing this at 6:30. So I'm going to move this thing back so that, maybe 3:30 my time. So, I make happy hour. So I'll probably be moving that every other Wednesday, 3:30 Central Time. So that way we're not here at 7 in the evening. And we do that. Then remember we do the Tuesday live stream. I think you were on the live stream. Was anybody else on the live stream last night? So every other Tuesday, we didn't do it yesterday, but every other Tuesday after we close down that live stream, we do the same thing. We have an overtime session with a whiteboard, and we do very much the same thing we did here. I think I invited some of you who are not paid students to this office hour. That live stream is completely free for everybody. So you don't have to be a paid student to participate in that. All right. Well, remember, inch by inch, your exam is a cinch. Yard by yard, your exam is hard. And I will see you for live stream, office hour, tutoring, whatever. I am posting a tutoring tomorrow, maybe tonight, Jerome, where I got permission and it's stock plus options. So it'll be the stock plus the put, covered call, how to protect a short stock position. So that should be up tomorrow at some point. You are welcome. You are welcome. Can you participate in another office hour next week? Did I invite you, Jerome, even though you're not a paid student? Are you not a paid student? Well, then, yeah, for sure. For sure, Jerome. Jennifer, did I invite you? I don't know. I don't think Jennifer's a paid student. Are you a paid student, Jennifer? I think I just gave her a scholarship for tonight. Yeah, okay. Well, there you go, Jennifer. So you're invited as well. So, we'll let you participate with us, even though you're not an actual paid student. So anybody else, let's just put it this way. Anybody who joined us this evening is welcome to join us any Wednesday. All right. All right, everybody. If you know where to reach me, if you need to reach me, Dean@guruexamprep.com. And more than happy to answer any questions you may have. All right. Bye-bye.